Let's dive into the chart and let's see what's happening. And before I do, if you have any pair you want us to look at, feel free to drop it in the comment section and we shall try as much as possible to inculcate it into our schedule for this morning. So as usual, the first pair we are going to be deliberating on is the US oil, and on the US oil, price has been moving to the downside in the last 24 hours as we finally saw a breakdown of that bullish trend line we identified on the daily time frame. So this is what we've been seeing the last 24 hours. Price has continued to the downside. We started the week at this point and we've had our price move from about the $94 mark right into the $87 area since the beginning of the week, and price has moved about 6 to 700 pips in the downward direction. So let's see what is happening on the higher time frame first before we move into what is currently happening at this point in time. So on the higher time frame, obviously we had a very strong bullish trend line that has been guiding price action in the last 2 years. So we can see that that was emphasized with that bullish trend line I was able to identify here. And remember, I shared with you how we were actually expecting a bullish momentum since the beginning of the week after noticing this multiple rejection of the $85 area by the buyers in the last couple of weeks. So because of this, we've been expecting that bullish momentum since the beginning of the week. We actually took one anyways, and this is what we have here on the 1 hour time frame. So when we scale down to the 1 hour time frame and look at what happened since the beginning of the week, we had a scenario here where we saw our price got consolidated between the $94.50 area and the $93 area, and we took that move to the upside from here. I think we took about 400 pips move from there before we started seeing this bearish momentum. And when we cited this bearish momentum, we waited for a breakdown of this bullish trend line to give us that signal, as there is a possibility that price could likely reject this level and push to the upside, but that did not happen, and we saw that signal in the form of a breakdown of this bullish trend line on Tuesday. Then we saw a retest of a structure, we saw multiple rejection of this area, then we joined the decline from this point to the downside. So this move, we've been enjoying this move in the last 72 hours on the US oil, as price action has moved to as far as the $87.50 area. Remember, we still have our take profit target right around the $85 mark, which is somewhere around the key level we identified here on the daily time frame, which also shares a confluence with the bearish trend line we identify on the 4 hours time frame. Let me show you where that is on the 4 hours time frame. Let's go to the 4 hours time frame so that I can show you. So we have here on the 4 hours time frame, we saw our price has continued to respect that bearish trend line since the beginning of I think since the month of June. We saw our prices continually respected this bearish trend line. So we were able to identify that resultant bearish trend line until we saw the final breakout of that structure during the mid month of August. Now, like I said during my previous live session, I told you how from a technical perspective, whenever we see a breakout of structure, something like this, we saw the breakout of that bearish trend line, we expect price to probably come back down to do a retest of that structure, where we will be looking forward to reversal patterns that supports a trend continuation to the upside. So lo and behold, price has been moving in that direction, and because of that, we were able to move our stop. We were able to extend our TP target to somewhere around the $85 mark, which is the area that we expect price to do a retest of, which also shares a confluence with the key level we identify at the $85 area. So one thing we want to be looking forward to here is this. We just want to see how this move is going to end. So we are looking at this bearish momentum right now, continuing to the downside. So the first thing I'll be saying is this. First of all, let me know how many pips are we running with right now. We're running with about close to 500 pips in profit at the moment. So what we want to be doing at this point is to move our stop loss in such a way that we lock in some profit at this juncture in the market, as we don't want to get ourselves caught up with unnecessary pullback that might happen at this point. And if we are going to be locking our profit, I will be suggesting somewhere right above the $89.50 area or around the $90 mark, which is right around that bullish trend line area. So now that we have a breakdown of that bullish trend line on the daily time frame, let me show you. This is a daily time frame here. So we've seen that in the last 3 days, we can see how we witnessed engulfing candles that took price out of the bullish opportunity we were actually expecting during the first day of the week. So we saw that we've seen a breakdown of that bullish trend line. So now we are in a situation where we need to be very, very cautious. Even though we are on a very bullish trend, we still want to observe how price is going to relate with this area. So with this area between the bullish trend line here and the key level at $85 mark. So we want to see how what pattern, what structure is going to happen within this area. So let's see what happens. So if you are still in this trade, move your stop loss to lock in some profit, and I cited somewhere around the $98.50 right above that area is quite appropriate to lock in some profit at this point. And let's see if our take profit target will be hit by the end of the New York session today. So there is nothing much on the US oil other than we lock in our profit and continue to watch price action move in the direction we expected. So what we are going to be waiting for to is a possible rejection of this level. Probably we're going to be having a reversal pattern here. It could be a double bottom structure. Then we look out for buying opportunity on lower time frame to join the rally to the upside. However, if we have a breakdown of the $85 mark, that is the key level we identify on the first day of the week, then we want to be seeing this as a signal that a bearish momentum is about to happen, because that is the major bullish trend line we have since in the last 2 years. So if we see a final breakdown of that level, then we must be careful and mindful that we might be having a bearish momentum. And remember, we are not going to get excited at the sight of a signal, because we want to wait for confirmation that is going to come in form of either a retest of the structure or probably the bullish trend line here, where we want to be looking out for patterns to join the decline to the downside. So this is the scenario we're going to be looking forward to towards the end of this week. So hold on to your selling position, lock in some profit, and let's see if price is going to extend to our TP target at the $85 mark. So that is that on the US oil. If you have any question whatsoever, feel free to drop a word or two in the comment section. Let's see how we can be of help in that regard. Now, I want to look at something on the lower time. Let's look at what's happening on the 15 minutes time frame. I want to see if there is a short-term opportunity for those who actually missed this bearish momentum we've been enjoying in the last 72 hours. So I want to scale down to the 15 minutes time frame, see if we could have an opportunity that we could take advantage of. So on the 15 minutes time frame here, now we can see that we are on a bearish momentum. And what I want to do first of all here on the 15 minutes time frame is to identify a bearish trend line after connecting the series of lower highs. So yes, so lower highs here. Then we have something like let's see, we have something like this to count with. And okay, so we have this. So let's see, when we bring back our candle chart, we have this bearish trend line, and then we need a key level to work with. So if we bring out our line chart and let's look at the current structure we have here, we can, if we look into the past, we see how this area has been a demand zone. We saw this area, it has been a demand niche before we saw the final breakdown of that structure. So I want to be identifying somewhere around the $89 area as our key level. This is for short-term opportunity, that is for those who are not in this trade and they are looking forward to be part of this bearish move. So I'm trying to identify somewhere we could be looking forward to as a trading opportunity during the New York session today. That is, if price comes back into this area. So let's see, we have somewhere around the $88.80. So let's try to label this area for the sake of clarity. So we have the 88.80 cents, and let's place this right at the top and side, on the right hand side of the screen. So we have, here we go. So we have something like this. So let's see what happens. And if you look at this key level here, you can see how the key level and the bearish trend line we identified here on the 15 minutes time frame share the same confluence. So if price is going to come back into this area, that is this key level or this bearish trend line, after which we cite multiple rejection, it could be a multiple rejection or any pattern that supports a trend continuation to the downside, probably on your lower time frame, you can join the decline from that point. So if price comes back, that is a condition. If price comes back into that area, you might want to be joining the decline from that point, which will be dovetailing to, let's see how many pips that is, about 200 to 300 pips to catch here, which is not bad. So let's see what happens. Is price going to come back into that level at $88.80? And if the market decides to give us some more positions to take advantage of, then it comes back into that level, then we could take advantage of a bearish momentum at the site of multiple rejection of that level and the bearish trend line. So this is the scenario we're looking forward to on the US oil. So let's see how we can take advantage of that move, be on standby to take advantage of that move. So let's move on. If you have questions, like I said, feel free to drop a word or two in the comment section, and I would try as much as possible to check the comment section from time to time. So that's that.